Joseph, welcome to the stream.
Hey guys. Hey Jess. Thanks.
Okay, so it's not
Uh,
normal when I do research on a guest coming on at 11 a.m. that I jump into Google Finance and start to look at stock charts and financial statements. So that's kind of a fun thing. But I'm going to start off with probably a very simple question I think is on a lot of people's minds, which is, what the hell is the point of a DAT?
yeah, it's the point's to expand the access to the market, man. I used to work at exchanges. I worked at Kraken for 8.5 years and was at CA Vertex, first Bitcoin exchange in Canada before that. And one of the problems with these exchanges is we have to onboard the users for them to be able to get access to the digital assets. And then ETFs come along, and now DATs, it's just another way to access the crypto markets. I think that's the primary purpose or initial cause for these things. It's like that's why MicroStrategy existed.
For sure. I think that it's a great simple answer. So then my follow-up question here is, what do the purchasers of these equities see as the big opportunity here? And because traditionally we're looking at revenues and we're looking at a line of business that is going to compound over a long period of time. I know you have a thesis on the value of owning a bunch of Solana per share. Can you just really make a fine point on that?
Yeah. Sorry, I'm kind of choking here. So the DATs are leveraged exposure to the underlying assets, and that's kind of the big thesis. So management team puts in place the system to hopefully safely lever up, and hopefully the cost of that leverage is cheaper than anywhere else one would be able to get it, and hopefully there's no liquidation risk, or it's much more remote than the liquidation risk would be, on Hyperliquid or a Binance or whatever for just trading like perps or on margin. So these vehicles ought to outperform the underlying asset. So it's safe leverage is the key driver for the investors and access.
Perfect. Okay, so I've loved your tweets because I think you have sort of like an authenticity and a realness in how you kind of approach this market. Makes a ton of sense that you've just been in crypto for a while and see that as a value. And I think a tweet you said was that most DATs are going to fail. And so I'm curious if you can expand on that and maybe put a fine point on why DeFi Development Corp isn't going to fail.
Yeah, I think I posted that a bit ago, and the market's moving very quickly. So now I'm not sure if I would say they would fail. I think many of the DATs will probably trade below the value of below their net asset value in a bear market, and we're seeing that happen already, even in a bull market with some of these DATs. But I'm not convinced for those DATs that that's necessarily failure, because they may still be able to grow their crypto asset per share even from that position, and they could still be successful businesses from there. I also think there's probably going to be like a DAT roll up, a bunch of acquisitions across the space, because there's almost 200 of these companies now that are listed or about to be listed in the US. And I think consolidation is going to bring down cost for these businesses. And as long as the NAV multiple for the acquirer is higher than the NAV multiple for the acquiree, then it can be accretive on a crypto asset per share basis for a transaction to take place. Sorry, maybe that was longer-winded than you were looking for.
No, I think these things need to be longer-winded because I think we see them come across the timeline in such simple terms, and understanding the pieces underneath that. Because like the narrative at one point, and probably in and around the time you shared your tweet, was that there's like unrolling or unraveling risk here, that the shareholders at a certain point are going to force liquidations, and forced liquidations are going to have a huge negative impact on the crypto price, and then all of a sudden we're just in the spiral downward. And I think that conversation has since become more nuanced, saying that I think the argument you're making here is, well, if it's trading below sort of the value that, or the NAV, there's just a ton of incentive for somebody else to come in, buy that, at that below NAV price, and just expand the overall exposure they have to the underlying asset in a very cost efficient way. So, which I think makes a ton of sense to me, and really just maybe that the risk moves to bad actors or funny business with warrants or new stock issuance and stuff. I live in just outside of Vancouver. Vancouver is notorious for, used to have the Vancouver Venture Exchange, now TSXV. It's a resource based industry, so there's a very permissive capital markets here that led to a lot of bullshit and a lot of brokers running around being proud of the bullshit they did. And so I always hold that as kind of like, people think crypto is a pretty scammy place, but I just like, if you hung out on the pink sheets or the OTC boards or even in some of the public market spaces, it's not, it's got bigger rings and fancier cars, truly. But I guess I noticed you guys did something interesting, which was, I think, an issuance of warrants to your stockholders, a warrant dividend.
Yeah.
What is that?
Yeah, so I think, was this yesterday morning? Yeah, we announced a warrant dividend where the effective date is in about 15 days. So anybody who holds DFDV stock that doesn't have it lent out on margin or whatever, or that you actually hold the stock, then you will receive a dividend of warrants to buy more DFDV stock at $22.50. I think the stock price is 17 something right now.
17.10.
Thank you. And we did this, well, we're partially inspired because GameStop had done something similar, and the stock had performed well after the warrant dividend. And this kind of brought to our attention, and we said, oh, this is like really interesting. Maybe we can bring some volatility into the stock and draw some additional interest. And so far, it looks great, right? Like yesterday was a good day for the stock, up 14% or so since.
Like 1 million views on that tweet announcing it, which is absolutely
that's right,
wild.
1.2, I think. Yeah, there was a little bit of paid spend behind that, but it's massively outperformed our other tweets. And I think we have great engagement relative to the other DATs and relative to our size. So that's really saying something. So I've been, I'd say, pleasantly surprised by the effect of that. It's got some other interesting interactions with the convertible debt and other warrants that we have outstanding. So from our first fundraise, there are 2 tiers of warrants, but the first tier of warrant is in the money now. And if investors exercise that warrant, then they would get shares that would then make them eligible for the next warrant. And if they exercise that warrant, the company brings onto its balance sheet about $42 million in cash that we would use to buy Sol. And
interesting.
Also, the first convertible fundraise that we did, the very first fundraise we did back in April, there's still, I think it's about 18 million in debt still outstanding from that convert, and the convertible holders, the debt holders from that fundraise, are not eligible for the warrant grant unless they convert. So, and if they anyway, there's some interesting dynamics here at play, and I think if somebody models it out and is in one of these positions, it gets very compelling for them to end up holding the stock on warrant dividend day.
Right, so you get more cash in to be able to go buy more Sol, which I guess is sort of trying to create this feedback loop upwards, which is interesting. Another sort of, I guess, line of exploration that I've seen you on is this comparison of DATs to foundations and the relative value that they might be able to bring to these underlying assets. I'm curious what your argument is there.
Yeah. Okay. Well, we had some internal debate, I would say, on how far we should go on this or what we ought to say. But I'd say, I think foundations were formed out of like a particular regulatory environment in the U.S. So when Ethereum launched, and well, even Bitcoin had a foundation before, but when Ethereum launched, they set up the foundation probably out of like regulatory uncertainty, I would say. And if there was kind of that certainty in place, they probably would have just set up like a Delaware Corp, like everybody else does for tech companies, and said, okay, this company's purpose is going to be to grow the Ethereum ecosystem, and we're going to do it, with kind of the support of American court and legal system and transparency and so on. So I think kind of the origin of the foundations being the Swiss Foundation or Cayman or BVI or whatever for the frameworks for DAOs and so on, and the foundations has got this like colored past, I would say. And I think if one was going to launch a new like layer one today, like what if Ethereum was launching today, and we're in the regulatory environment we're in now, they probably wouldn't have a foundation. They might have a for-profit corporation, and maybe that corporation would be publicly traded. And to the foundation's credit, I think of course they've facilitated the growth of all of these ecosystems and kind of supported crypto to its successful state. But again, the reason they existed is gone, and maybe they would be organized totally differently today. And anyway, we just how do I say this? I'd say if a new popular token or chain was launching today, it probably would launch with a DAT instead of a foundation if there wasn't kind of FUD around DATs as exit liquidity.
Yeah, that is interesting. I mean, the two, I guess, supporting thoughts I have there are, one, a lot of these foundations are already acting as if they are, financial institutions. They are hedge funds. They are making venture investments. Some are more direct about that than others, but the vast majority, I think, aren't as direct about that. But that launch an L1 and L2, expand your balance sheet, and then go put that capital to work is what is happening behind the scenes today. If it's just not front and center. And then the second one is I know folks who run, I guess it used to be a management company that would help set up foundations in Cayman or offshore. And I think they have turned most of their efforts towards the public markets and DATs as the more compelling vehicle going forward. And I think they're seeing that from a demand side as well. So I think that's an interesting point. And it is interesting, though, that the primary narrative here, especially on the timeline, is that Story launched a DAT because it is just pure exit liquidity. The thought around some of the other SOL, or I guess around the SOL DATs, is this idea that there would be staked SOL that's acquired, and so it's just helping VCs dump or the foundation dump. Obviously, you don't believe that to be true. There's a broader vision here you have. So I'm wondering, can you just make a succinct pitch for a SOL DAT?
Yeah, sure. Yeah. So SOL DATs exist or are great for kind of three reasons, but kind of overarching is the ability to get leveraged access to the underlying asset. And the reasons that the leveraged access to the underlying asset works or has the ability to provide the leverage in a fairly safe way. One is the underlying asset is volatile, and that volatility is monetizable. And we've seen MicroStrategy implement this via their convertible debt fundraising. So you can get investors to buy debt for the company at a premium to the stock price and the net asset value, and the converts are valued like options, which are valued off of volatility. So that's what drives the premium, and in MicroStrategy's case, the very low coupon, I guess I should call them strategy, very low coupon or zero coupon on these debt instruments. And then the same applies to convertible preferred, which also behave and are priced like options. And I think we'll see investors pay over the conversion price for these instruments because they're priced like options. So that's one. So Solana is volatile. That makes the DAT volatile. The volatility of the DAT turns into this monetizable or farmable asset almost that can be used to drive asset per share growth. And then the other is one can stake Sol. So we run our own validators at DFDV, and Parker, I'm a co-founder, COO, CIO at DFDV, has been running validators for 2 years. We brought his validators into the business, and we stake our own Sol to our validator. We also have third-party stake, and DFDV Sol, which is a liquid stake token created by Sanctum associated with that validator, is a collateral asset across, I don't know, 10 probably now, maybe more projects on Solana, and third parties can mint DFDV Sol, which stakes to our validator and generates revenue for DFDV. Then third, which I'm kind of touching on with the DFDV Sol piece, is you can actually participate in the Solana DeFi ecosystem and generate yield. And we think this is like a critical component for DATs. So DATs ought to participate in their ecosystem, kind of put their money where their mouth is, and we're doing that. And we have about, it's a little over, I think, 10% of the balance sheet deployed on chain where we're trying to earn yield on it or participate in the ecosystem. So we run a stake looping strategy on Camino and Drift with DFDV Sol. And we announced, I think, 2 weeks ago, a partnership with Gauntlet where DFDV Sol is a collateral asset for a vault that Gauntlet runs on Drift that's running a basis trade on Drift. And I was just looking at that this morning. It's earning, I think, 4 or 5% over the DFDV Sol number.
It's funny because I think I had an operating mindset that money Legos would just be things that were on chain, and that is obviously a very narrow view of that opportunity. It's sort of like the biggest opportunity is the integration between those.
Mm-hmm. Yeah, I think that's going to be epic, honestly. Like we filed an S1 for a preferred instrument a few weeks ago now, and it's not approved by the SEC yet, but this is going to happen eventually. And from my perspective, this is just kind of the beginning. There's all kinds of stuff you can do with a preferred stock offering, and we can tie it into crypto. We can tie it into stablecoin yield. We can tie it into some kind of staking product and take these like crypto native yield generation or speculative assets even, and wrap them in a public ticker via preferred stock. And I think this is going to be a lot of fun. And I'm really excited about kind of the next few iterations here. And of course, Strategy's kind of paved the way. They have 4 of these instruments out now, but it's just the beginning.
All right, maybe last question. You've been very generous with your time here with us today. Why Sol over ETH?
Yeah, well, it was kind of personal for us. So Parker and I, who I mentioned earlier, when we started talking about working on this, it was kind of obvious to us, like, okay, well, we were the first non-Bitcoin DAT in the US, and we did our change of control back in April. And this was before any of the ETH DATs. And we said, okay, well, we can't really work on Bitcoin. MicroStrategy's massive. What else can we do in the public markets in the US when this opens up after Choke Point 2 ends? And it was obvious to us that it had to be Solana. And we'd been participating in Solana DeFi since mid-21. And like I said, Parker had been running validators for 2 years.
You knew it. You believed in it.
Yeah.
An obvious place to start. All right, man. Well, thank you for answering my very simple questions here. But I think I'm somebody who I play in early stage projects. I play it for the longest time and really at the edges of the weirdness of crypto. And I think a lot of folks that have, we came into crypto because it was this open financial system that we were locked, something we were able to participate in when the traditional financial system was really not available to us for a number of reasons. And I think the risk today is for people to really, if you do not examine your priors, you're probably missing out on a whole new big world here. That's at least been my sense with sort of this public markets DAT dynamic that's emerging, that it's not something to discount, but rather to see how how it can be really leveraged to benefit either the mission, vision, values that builders have. So I enjoy how you show up, and you guys are in spaces all the time. You sort of have to do the press releases that show up on PR Newswire, and then you're very active on Twitter. So thank you for the education, and yeah, look forward to checking in with you again, and hopefully the thesis here of DATS being net positive for crypto assets and not having a destructive unwind will be true. I think I'm with you.
I hope so.
You and me both, man. You and me both. All right, Joseph, Chairman, CEO of DeFi Development Corp. You guys are trading at a $361 million market cap right now. Big numbers, baby. Big numbers. Thanks for hanging out with us today.
Thank you.